Welcome to Morpheus Trading Group. On the 13th of this month, we presented this chart of the Nasdaq, the Compex, $Compex, which is the Nasdaq Composite Index. And we stated on that day that the Nasdaq was likely to find support at the 200 period moving average, right here, this orange line. And the reasoning was, of course, that normally a stock or an ETF or an index isn't going to lose its support, the 200 period moving average support on its first attempt of touching that support level, especially given such a long time period. Here we're looking at September of 2010 was the last time, going that far back in time, that we had touched the 200 MA. So we had to go back almost a year right here, and that was the last time that the Nasdaq touched the 200 period moving average. Now since this day, you'll notice, and that was the 13th, the Nasdaq bounced. We had a one-up day. Of course, that was short-lived, where we gapped down the next day. We came back in to test support of the 200 period moving average. And then yesterday, we actually undercut the 200 MA, but noticed something important. We formed a reversal candle. This candle was a reversal candle. And we know that because we closed in the upper third of the trading range, but there was a point during the day where we had severely undercut the trading range. And the Compex could have just fallen off a cliff from here. It could have gone much lower. But buyers stepped in. They more or less guarded this turf around the 200 period moving average, and we managed to close almost at the previous day's close. So from here we would expect further consolidation. Certainly wouldn't be unusual to maybe get another quick undercut of this low or some choppy activity. But we would expect, we're starting to see the signs of the sell-off at least stalling. If nothing else, it's stalling. Because notice here we had 9 straight days of selling. There was no hesitation. And now we're getting some choppy activity. So at a minimum, we would expect consolidation at this level before another move down. Or, which is more likely or which is more typical, that we might get some whippy action, but then a rally, generally up into the 20 period moving average, and then of course followed by a sell-off for another leg down. Our position right now is to be cautious taking on new short positions, or really taking on any positions right now in the market, whether it be long or short, simply because there's a lot of whipsaw activity in the market. The market is very choppy, and we're likely near the end of a big impulse move, and the reversal was on the horizon in our opinion. So during these times, we generally try to stay flat, get out of the market, and allow things to kind of sort out before taking on new trades. If you enjoyed today's presentation, please join us at www.morpheustrading.com. Again, that is morpheustrading.com, where you can sign up for your free membership to receive analysis like this every day. Thank you for joining us today.